Hi everyone, this is Kathy Lean with BK Traders. It's going to be a very busy week in the Forex market and the financial market in general. We've got the Federal Reserve meeting and the U.S. jobs report in the calendar in the same week. So there's no question that the U.S. dollar is going to be front and center because these are the two most important event risks for the greenback. And the market's appetite for the U.S. dollar will determine how all of the other major currencies move. So it's going to be more important than anything else. Now, in terms of the Federal Reserve meeting, the market's going to be listening very closely. Data hasn't been terrible, but the market is still pricing in 5 interest rate cuts by the Federal Reserve this year. That has come down from 150 basis points of easing to 125 basis points of easing. But the problem is that's still very far away and much more aggressive than what the Federal Reserve says they need to do, which is only 75 basis points of easing. So who's right? The market or the Federal Reserve? Now, data, as I said, hasn't been terrible. So we've seen those expectations decline. But the market will be listening carefully to see whether the Federal Reserve is worried about the lower inflation or whether they find comfort in the stronger labor market numbers and, the strength that we're seeing in other parts of the economy. Now, for the Fed meeting itself, if they have no changes in guidance, I think that's going to end up being dollar positive. If they express any renewed concerns or the kind of, emphasize the decline that we're seeing in inflation, that could kick off a more dramatic sell-off in the greenback. And then we'll be tuning in to non-farm payrolls. It is the strength of the labor market, the resilience of jobs that's really been holding up the economy and the dollar. But non-farm payrolls are expected to be much weaker in January than they were in December. And if those forecasts are fulfilled and it comes in at 170,000, which is what is expected compared to 270,000 the previous month, then that also could kick off a sell-off in the dollar, particularly since the unemployment rate is expected to go up. Aside from that, we also have the Bank of England monetary policy announcement. No changes are expected from the BOE. They are actually not expected to lower interest rates until the second half of the year. But data has been great, and there's actually a chance of a recession in the UK this year. So if the policy statements and the comments are a little bit less hawkish and more dovish, that could also send sterling tumbling, but we'll have to see whether that happens. Then from Euro, we've got Eurozone Q4 GDP, we've got their inflation numbers. Those are very, very important numbers. Last week, we had the ECB meeting. They lowered their inflation forecast and basically said that inflation did not rise as much as they anticipated. Market interpreted this to be a dovish tilt, sent the euro lower, but then ECB officials came out and said, wait a minute, I think that the market's, overthinking the possibility of an interest rate cut. So that makes this Q4 GDP and inflation data very important in determining, what is right and which way the ECB will actually lean and how quickly they could lower interest rates. So all of this is important, and we also have inflation data from Australia as well as a number of other reports that I'll update you on as the week progresses. So I wish you all a great trading week, and I will be back with you. This is Kathy Lee with BK Traders.